Shin. He's the co-founder and managing partner at Shorooq Partners. He built his career as an investment banker, the dream for many Pakistanis about a decade ago, right? The parents' dream. Our kid's going to become an investment banker. Shane was born in South Korea, so I'm sure that was your parents' dream too, right? He has studied and worked in the US, Canada, and China prior to settling down in the UAE, where he's coming from for us now. He plays the piano and clarinet for more than 15 years. I hope you enjoyed our performance earlier. Wasn't it beautiful? Please give a warm welcome to Shin, who's going to be talking to us about early stage investing. Thank you.
Hello. So that was actually my third time ever in my life to do yoga. Because the first 2 times I did, it was actually in hot yoga. It was like I tried to lose weight. So it was, I remember it was a quite hectic experience. So my name is Shane. I'm super excited to be here. It's my first time in Pakistan. But we as a Shorooq, my investment firm, we focus on Middle East, North Africa, and Turkey, especially focus on seed and pre-seed and pre-series A. So I wanted to talk about that. So I actually will start with a quick story because my topic is actually about lead or not lead as an investor. Okay, so literally a week ago, so it was last Tuesday, so actually a little bit more than a week ago, my friend called me saying that can Shane or can Shorooq actually lead our pre-seed investment. So they were so squeezed by the lead investor who actually put, in my view, not a fair term, but they were actually out of options because we as Shorooq, we also evaluated, but we passed. And unfortunately, in the Middle East, we still don't have enough lead investors who want to take that first, let's say, risk, who want to write their term sheet, who want to do their own due diligence. And they were so squeezed and they were desperately looking for support. But unfortunately, we couldn't help because we are unfortunately already passed. And I know they were forced to take their term sheet, and now the founders still, although after signing the term sheet, they still have a grudge. So that's really the moral of the story that I wanted to explain for the next 13 minutes or so, why securing a strong and credible lead investor is important, and why that is actually a first step. Okay, but before I get there, this is a quick bio of us. Shorooq, if there's one thing that I want to leave you about our company, I want you to remember that Shorooq, we pride ourselves that we want to be the founders, partners, company builders, and value investors. So far, we have backed about 40 founders, and as you can see, frankly, a lot of them have been female founders. So it's not our KPI, but we just happen to find that a lot of the founders we have backed with, 40% plus of the companies we have backed with are actually led by female co-founders. So we have made 29 investments over 19 companies. So we do understand the stage we play in, and we have led primarily in most of these deals. So this is a great team. The quick punchline here is we're quite international. I myself, as you guys saw, I am Korean. My 2 other partners, one is an Emirati, went to Stanford. Another person, he is a British African who grew up in Malawi. So whenever we make an investment, although we focus on MENAT and we are learning about Pakistan because we want to be active here, our thesis has always been how can we help the companies get into the Middle East or get into even Southeast Asia or get into even US, where a lot of us have a lot of friends and network with. So if you're interested in expanding to let's say, the Middle East, or if you're looking for capital, we'll be happy to get introduced and really get to know each one of you. I talked to you about our firm, but you can read about this in our website, so I'm not going to spend too much time. Other than the one point, we as a Shorooq, we have a lot of pride, and we take really a lot of time to really lead all of our deals. So I'm sure each one of you who is a founder, you guys have been or trying to fundraise or have been fundraising. And really, in our view, that is the first step. So when you're out for fundraising, regardless to the amount, the most important step is actually securing a lead. What that means and why is securing a lead important to you? So let's say I'm a founder and I'm trying to raise about $1 million. That is 160 million rupees, I think. So when you're about to raise 160 million rupees, I will first try to identify which VCs or which institutions, which even super angels can be our strong and credible lead that not only takes, let's say, X% of our round, but how can he or she or this institution can really be my partner in this fundraising process. So you're effectively looking for investor who can really fight for you in front of the other investors. So he or she might be really giving you a hard time in the due diligence, but when they sign the term sheet with you, this person, their role is really to influence other investors and persuade them and share their thoughts and investment rationales, why this investment is a great investment, why they committed to lead, and why other investors like you should be part of it. So that's really the punchline. And the most important role as a lead investor is that they actually make the company investable. And what I mean by that is they, for example, define the terms of the company. So if you're raising a seed round, are you going to raise through a convertible note, KISS note, SAFE note, or are you going to raise through equity? So the lead investor defines all of that, and they negotiate with you. So obviously this is quite important, but it also influences other investors' rights. For example, I might define major purchaser, which means if you're raising $1 million round, only investors who put above $200,000 round might receive information rights, might receive pro rata rights for the future rounds. So all of these are quite important for other follow-on investments. So that's why every investor, they ask you, who is your lead? And if you have a strong, secure lead who has a strong reputation in the ecosystem, it does make your job a lot easier. And this is not always the rule, but most likely the lead investor is going to be on your board. So this is definitely not a 3 months, let's say, transaction process. This person is going to be active with you in your company at least for the next 3 to 5 years. So there is a good chance that you need to find the personal fit and see how you enjoy working with it. And lastly, this is actually important. I hope you don't have to go to this. They tend to be your last resort if you need an SOS. So we have a company that we put a term sheet, and they were raising $1.5 million round. And they were so, let's say, optimistic, so they thought they could raise a full 1.5. So we gave them a term sheet, but they actually ended up only raising $1 million. So a lot of lead investors can actually tell you, look, because you didn't close the round, we either don't invest or you just have to hustle to get to the 1.5. But such stance can jeopardize the company. And in this particular situation, we were comfortable with the raise to be lowered to 1 million because the company was doing well and we had a lot of conviction in the company. So we worked with the founder to lower the threshold to 1 million, and we closed around, and the company is now doing quite well. So the punchline here is any lead really should be your founder's partners, especially from the investor side, because the investors normally like to talk to other investors and get their view. So they're going to be your bodyguards in front of other investors, and also they will make the company investable, which is quite important. So you might be wondering, what makes a strong lead investor? And the most common answer when I ask this question is like a Sequoia, Excel, NEA, all those A+ blue chip names from the US. So obviously if they invest and if they lead you, they do carry a big weight. You probably will be way oversubscribed. Every investor and strategics you never even talk to will probably call you and try to get in. But especially here in the Middle East and let's say Middle East including all the subcontinents and actually even Africa, it's rare to find those, let's say, US blue chip names investing. So there are other considerations we need to absolutely make when we find and secure a strong lead. And the first one, in my view, is that the significant experience of working as a lead. Not every investment firm, actually their style is to lead, and which is perfectly fine. We like to have a concentrated portfolio, so we try to lead all of our seed and pre-series A deals. But even for Series A deals, we make on a case-by-case to lead or not lead. But there are a lot of VCs, frankly, predominantly a lot of VCs don't prefer to lead. So just just keep that in mind when you're talking to them. They might not be a lead, and they might tell you, we're interested, we want to commit only, and if and only you secure the strong lead. And that kind of disappoints the founders, but that is how it is, especially on their own investment style. What's really important in my view is the sector expertise. Like if you are in a particular, let's say, edutech or fintech or platform, but if you're a platform in healthcare space, there is a lot of those sector domain knowledge where investors should have. And as the lead, they will tend to be quite active with you in helping building the company. So in my view, you have to look for sector expertise. Did this company invest in your platform, in your, let's say, domain expertise quite a few times? Right, so let's not only be carried around by the, let's say, firm brand name, because they might have no idea about your sector. And there's, even in the US and Europe, there are thousands of VCs who we have never even heard of, but they're actually quite good and exclusive to that particular domain expertise. So the reason I highlighted this first one, this is something that we as Shorooq care a lot about. Just because when we entered the region from 2016, because I moved from San Francisco to UAE back in 2016 and 17, we were actually surprised by how far human decency can, how far just being a nice person can take you in actually in our region. A lot of times, you, like US entrepreneurs, will probably be pissed that the investors don't even respond to your emails. And a lot of times, even if they commit to sign the term sheet and be your lead, they're actually just not accessible because they're just so busy. So in my view, that's definitely not the best candidate for the lead. In my view, the candidate for the lead should be accessible to you. When you need help, they should be there for you. When you want them to talk to other investors, they should be there for you. And that's why I just wanted to highlight that. Do consider this point. You might be wondering why an investor would like to lead, because actually it's a lot of work. We sometimes also wonder, like we do all this hard work, all this due diligence, for what? Perhaps it's easier to just follow on to others who we hope that they did that work and make the decision on top of that. Really, it comes down to your firm philosophy and values. We love to be active with the founders. If you make just a follow-on, you tend to be quite less active. But we love to spend time with each one of you and help you grow. And also, we want to be there and grow the company, but also protect our rights. So normally, we do like to serve on the board. Definitely, at least we represent the board to protect our rights. So this is the last note that I wanted to leave with, because I actually see more and more where the founders who got tired of talking to the VCs, especially the local VCs on each emerging market, they tell me, what if I prepare my own term sheet? Because these safe notes, KISS docs, convertible docs, they're all pretty standardized. So like you can engage with a lawyer and draft your own term sheet and see like who bites that. And I've seen it actually works. And when it works, it actually does the magic, because you don't spend time negotiating the valuation, which frankly is quite, let's say, distraction. So you can get it done. And also, I've seen it works when you have a strong track record. And if you're a serial entrepreneur, sometimes you yourself even commit half of the round. Then there are frankly other investors, if they like you and still want to get in, they will get in. But I definitely do not recommend it, and I'm sure you guys agree, because getting the investor and especially the secure investor institutions is not only about capital, but it's about the network and also about leveraging their experience and expertise to build and fulfill your journey. So this is a quick summary of what I prepared. I actually wish I could open to the questions, but I guess this setup is not the best. So if you see me around, please grab me, and I'm really excited to get to know each one of you. Thank you.